You're live.
All right.
Hi, everybody. We're live.
What is up? 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 What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And if you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. Hey, on the show today, we're going to revisit the 4Ds because that's what's creating any and all activity right now. And we're going to play a game called I'm Gonna. Because I hear that a lot. I'm going to wait for rates to go down. I'm going to wait for home prices to slow down. So we're going to talk about that. We're going to talk about the jobs report that came out yesterday. We're going to talk about the CPI, which is the Consumer Price Index. For y'all that listen to the show, you know what that is. You feel like you just passed the test. When I said CPI, you went, oh, I listen to Mortgage Gumbo. That's the CPI. That's the Consumer Price Index. He's talking about inflation. That's one of the reports that's going to come out, right? And more. And then we're going to talk about why having a quality realtor is so important, especially during these times. Let's welcome in my esteemed co-host. I got to give him maybe like an official doctorate, like these schools do with people. Dr. James Parker, welcome to Mortgage Gumbo. Yeah, and he just the guy's so popular, people just follow him around so they could clap when his name's mentioned. It's pretty cool.
I'm not sure if I've ever been referred to as esteemed before.
Well, we got it,
I like it. I hope it
yeah,
sticks.
and not because you're steamy. So, James, we got a lot we're going to talk about, a lot going on. Some things that, from the headwinds, what are we trying to do here? It's education, it's options, it's making us, what are we doing to educate our listeners to understand what's going on, right? We got a little spoiled for 10 plus years. Rates weren't over 4%, right? Then Fed came in, we started to, everybody forgets the term was quantitative easing, right? That's where we were buying up all the bonds and guaranteeing the bonds. Well, what happens when you get a guarantee? Well, you can lower everything. It's just like in the military, right? If you own a business, the greatest thing in the world to get is a federal contract, right? They overpay, right? You go to the hospital, the Fed, they all back up this. You pay $20 for a Band-Aid. When you go to the dollar store and get 20 of them for $1 in the dollar aisle. So today, we're going to talk about really what's going on and continue to just educate our listeners on what's happening. And that's why I kind of put this as the I'm gonna, right? The same people, it goes with the weight loss. I'm going to stop eating chocolate. I'm going to start working out. I'm going to be nice. All those type of things. So, but first, James, hey, listen, when we get out of here today, I got to take a couple minutes. We had a good week on Tuesday. Great win for Lakeshore Titans. And if anybody wants, hey, just go YouTube, Lakeshore Titan Baseball. We now got the Titans Baseball Network. If you want to see some good baseball, especially if you're playing at Lakeshore, because that's where we do all our home games, because we don't have lights. So if you know anybody at St. Tammany Parish School Board, you want to have them call me directly. I'd love to know how in 2023 we don't have lights, but that's a whole different thing. But took a tough loss last night to St. Paul's, really good team. So shout out Mike Arnold, who's the kind of got the whole streaming thing started, and Jeff Winchester had a chance to be on their broadcast last night. Mike's a big fan of the show. He tried to cross me up, asking me an FHA question, James, in the middle of doing a baseball broadcast, but he said I got it right, so that's what's cool. So, but Mike's a big fan. So Mike Arnold, Jeff Winchester, shout out. We'll see y'all today. Excited to get y'all in the press box for the Titan broadcast today. Doubleheader 11-1. So good. We got the pleasantries out the way, James, right? Let's talk about, because I don't think people understand Silicon Valley Bank. I don't think people understand when the 16th bank in the United States of America goes under, right? Where are all these measures? Oh, all these measures have been put in place, right? The Biden economic chick took 2 seconds to get on camera yesterday to go, we have measures in place. This won't start happening. How did it happen, James? Right? So kind of tell me what your thoughts are on it, and then I'll kind of give you why we need to be keeping an eye on this, and in my opinion, why I think it's a bigger deal than any news outlet out there is going to be telling you.
Well, I haven't dug too much into this because it just happened this week, and I am very intrigued because the headlines are telling two different stories. Number one is I saw that there was a bank run where I saw a picture of people lined up outside of one of these branches, and I've never seen a Silicon Valley bank, but they tell me in Silicon Valley it has 25% of the market share, like 25% of all the deposits in like the richest market in the world.
It's known for the startups. It's one of those banks that cater to startup companies, hedge funds, stuff like that, James.
Yeah, and so when you're talking about the neighborhood where it has the headquarters of like Google and Facebook and all these huge tech companies with these enormous salaries, and every house costs $800,000, if not $4 million bucks, and it's ridiculous that that pool of money, if you have access, you're a bank that has 25% of the richest people out there. How in the hell are you going to fail? And then how are these people going to line up like an old-fashioned bank run? And I thought we didn't have that anymore. Like in what's the Christmas movie? It's a Wonderful Life, when there's the old-fashioned bank run and everyone shows up, and that's not what happened, is it?
So when you say, how does that happen? Let me tell you how, James, right? And this is where behind the scenes, these are the things that why we're educating our listeners. And these are the things that normal people who aren't in my industry aren't paying attention to. And why would they, right? I mean, how is a bank ever going to collapse in today's day and age, right? Let me tell you why. And the result of this bank collapsing is what we've been talking about. And this is proof. For years, we've been talking about the Fed. Why did it take so long to start raising interest rates, right? Why did it take so long to start making moves on money? The Fed was very, very, very late to the party on that. Let's say lazy, right? They were taking advantage. Everything was looking good. And look, this is pre-Biden too, right? Everybody kind of, now the one denominator is Jerome Powell, and how him and Janet Yellen still can even walk without bags over their head, I will never know. And maybe this will be the difference. But when you have people that are late to the party, or they take their time, right? They're fashionably late, James. And then when they get there, everybody's singing happy birthday to your kid, but they want to make it all about them. And they're yelling and screaming, woo, let's toast, let's do this, let's do that. This is what we've got. So the reason why this bank's failing is the Fed's late to the party. And what are they late to the party on? The Fed deals with treasuries, right? The federal funds rate. These are short-term loans, right? These are your treasuries. These are, your auctions. What are they doing? So the Fed was late to the game. So then what happens? Last March, they go, all right, we're going to start raising the federal funds rate. Well, there's leadership issues here as well, right? with Silicon Valley Bank. But James, what happens is this bank gets caught because they're making all this money buying all these bonds, taking in for all these startups, and they're able to give money back because when the rate's so cheap on these treasuries, they're making money on that because they can go charge fees, all this kind of stuff. So now what happens is, as this starts to go up, they're stuck holding treasuries that might be worth 2%. And now the 10-year treasuries at 3 and 4%, touching over 4% at parts of last year into this year. I don't know what it is this morning. It's in the 3 somethings, the 10-year treasury. So, James, they can't go lend money out because nobody's going to buy it at that cost, right? So their profits go down. So all it takes is one of these companies to start saying, it's like Bernie Madoff. He was getting away with it until 08 happened. If 08 doesn't happen, Bernie Madoff's probably still manipulating everybody's money. But what happens is, as these bonds, these startups start going, hey, things are a little tougher. I need a little bit more of my money to keep these things going. Well, then it's not there. I can't give you back everything right now. And that's what we're seeing. My concern is, where does it stop? And you said, oh, people are lining up. They are. Now, I don't know when you're a startup what your FDIC insured is. I know for most, you love to walk in and they got the plaque, the gold plaque, FDIC insured. Well, that's up to $250,000, right? But if you got 4 accounts with the bank for $1 million, it's only the first 250, right? So I don't know what the FDIC insured is for a hedge fund or a startup, James, with a couple billion in there. So they said Monday these people can come get their money. That's a big concern. So, James, when you start seeing this with this bank closing, keep an eye on this. And these are the things that we do not want to see. My concern talking to you these last couple years, when James and I have been telling you, and I've been telling you about why the Fed was late to the party, this is the result. Because you go from 0 to 100, right? You raised the rate last year over 4.5% in an 8-month period. That hurts. Look at what it's doing to your credit card payments, your credit card debt. Those are the things. So imagine that on the magnitude of the 16th largest bank in the world, and this is what happens.
Okay.
And that's why there's pain here. And that's why I want to address that. And that's why we talk about this on the show. And it leads to, and why does the Fed funds rate affect mortgages? Not directly, but it affects, not infects. Look, it's almost like a precursor there, but it affects inflation, which is what the mortgage interest rates follow. So keep an eye on this stuff.
Well, I have questions for you that I don't understand about this, because I read the article and I'm like, okay, some bank I've never heard of said the San Francisco and Palo Alto fails. Whoop-de-doo. How does that affect me? So then I read through the article and they tell you some interesting stuff. This is the largest bank collapse of any financial institution since the financial crisis in 2009. Oh, well, that's kind of a big deal. It's even worse than that. This is the second biggest in all of history.
All of history, outside of Washington Mutual, which was gigantic in 2008. This is tremendous, and that's why it's cause for alarm, and it's why we're bringing it up. Because, folks, you got to understand what's going on. And when we tell you the Fed is trying to inflict pain, they're not trying to shut down banks, but we have complete infutility running this right now, and they do not know. And that's why that is part. So we are at their mercy. And we'll talk about that. I see we got a question from Jen in Mandeville. We'll get that answered on the other side of the break. Hey, if you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. My neckline, for those on the stream, I think my neckline's looking good today. You could tell I kind of been doing a little exercise, I think. It looks a little, I have to go back and look at some other posts. Maybe it's the camera angle.
It's a pretty amazing neck you got there.
Yeah, I mean, it looks like it's a little thinner. I got tired of looking up YouTube videos, James, and stream guests. I got tired of looking up YouTube videos on how to shave your beard to look skinnier.
The
I just said, you know what? I got that Max trainer in there. Let me go dust that thing off and see what it's all about and go from there.
Man, my wife has been doing this intermittent fasting, and so yeah, I'll do that with you.
It's
Where
good, bro.
you don't eat all day and you just eat dinner. I can do that, but every once in a while, she's like, "Well, I just can't eat all day today." I'm like, "Oh man, I'll do that with you." And by about like 8 o'clock at night, I'm ready. I could eat a dinosaur. I'm looking at the kids. I'm like, I could chew off her leg. You know,
Yeah, there's some apps for that stuff, and it's pretty cool.
that is tough for me, man. I'm not sure I have the willpower my wife does. Hey, Dwayne, so you mean to tell me no other banks all across America made the same mistake with bonds that Silicon Valley made?
Look, man, this is alarming, bro. I mean, this is very, very alarming because, you know, is this a one-off? James, I sure hope so, man, because you want to talk about let something else come up in the next 30 days. You want to see Matt, all of a sudden, everybody taking out their money out of the banking system and putting it in mattresses. It will collapse it, man. It will collapse. And that's what happens.
Good.
That's what happens. Well, I mean, you say good and it sounds fun to say that, but in reality, this is something that, is quite concerning, right? I mean, so stock market's tanking, right? You're losing your shorts. I mean, do you understand a couple times this week the stock market loss? I think this was the second worst week or the worst week this year, but down 4%. I mean, dude, losing 500 points in a day used to be like earth-shattering news. Now, it doesn't. It's. We're back. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. Nice job by producer Dave, little Debbie Deb Radio. That gets me fired up. So talking during a break about this and talking about this Silicon Valley, and hey, if you want to discuss it more, we may chat about it more on our Hump Day Holler, James, this week. We'll get some more details, but it's something, go look it up. Go read about it. But again, see where you're getting your data. So had a question from Jen in Mandeville. Pull that back up, Jen, James. If she's an authorized user for her son puts her son as authorized user on her credit cards, will that help him get a better interest rate on his automobile? Not necessarily. I mean, the authorized user is a trick that we use on the mortgage side to raise someone's payment. But Jen, before I could sit here and tell you that, it would depend on what his credit history looks like. If it's somebody, and we don't know the situation, but if it's somebody who's never paid a bill and we just go throw an authorized user on there, it's not going to really make that big of a difference. Or if he's got 4 credit cards and no installment debt, it's not really going to make a difference. So unfortunately, I can't really answer. It's not that simple. So it's a good thought. I would recommend that over lending him money all day, every day. But you really got to have an idea of what's his credit score, what is his credit what's his credit look like, and go from there. If there's no credit established, maybe give it a shot and see what happens. That may help out in that realm. So, James, let's talk about, in reality right now, we've kind of created something, and, in my world, it's all about, creating these, what do they call them, James? What's the 4D called? No, not a synonym, in our industry, like, LTV means loan to value.
Like an
right?
acronym?
Acronyms. Sorry, there you go. So in our industry, acronyms are everything. And you and I kind of, when this stuff started, we kind of came up with 4D, right? And for that, that is who's making moves right now. When we're talking about existing home sales, which means somebody's living in it today, who is selling that house? What loans are being done when you're in an elevated market, right? And what that is, what I found, and I have proof because of the closings that I'm doing, it's 4D, and it's one of four. It's divorce, death, debt, and distance, meaning relocation. Those are the things that right now are moving and shaking the market. So when you see a home going up for sale, probably in one of those categories, right? So when you see refinances being done right now, I could tell you from my standpoint, I've got 8 refinances going right now. So more than half are because of divorce. The other ones are debt, and then I also have having to doing some refinancing because of deaths in the family and a reload that's having to relocate. So I'm seeing it. So that's why I'm sharing that with you. But James, kind of tell me, because we brought this up, and I know you get questioned on it because you're part of the show, and you do things nationwide for other folks, so they kind of listen to you. Kind of tell me what you're hearing or your side on this with the 4Ds.
Well, I'm trying to figure out the scenarios here in helping these people because the people that don't want to move right now, they want to move but just not right now. They're in a great spot and they can wait, and what a luxury that is. But I hear scenarios of people in all 4 of these situations. Hell, I was in one of these 4 situations about a year ago, and so the important thing is for the people that have to buy right now, the people that have to go through these rough, choppy waters, how do you do it? So the first one is debt, and that is something that I am talking to one of my personal friends about.
Right.
They have too much debt. Most of it's credit cards, and they have equity in their house. They're not going to move anytime soon, but it's sort of reached this breaking point to where they are tired of taking all the extra money that they have at the end of the month just to cover the minimum payments on their credit cards. They're in a place now where their budget is the minimum on their credit cards.
Yeah.
And they just can't live like that. It's been like that for 5 years and they're not getting ahead. And so they're like, look, we've got to free up $800 worth of outflow every month. And a refi could do that. I'm telling them a refi can do that. You do a cash out refi, you wipe out that credit card debt. Yeah, your house payment's going to go up a little bit, but it ain't going to be by $800 because that's what they're paying in credit card fees every month. So when the guy comes in and asks you, a guy who actually knows what he's talking about when it comes to a cash out refi, say, Dwayne, I've got all these credit cards. My minimum payments are $800 a month. This isn't working out. What do I got to do? Does this cost them anything? Do they have to come up with like a few $1,000s worth of closing costs? I know that you don't need like a down payment or some big expense like that on a refi, but what all is going to be into what all do they need to have in order and be ready? Do they have to have a certain cash amount? What does it take?
99.9% of refinances doesn't cost anybody a penny out of pocket, so to speak, when you come to the closing. It's worked into the loan, right? So, and this is the norm, and this is what we're seeing right now. And what people are battling in your friend's 5 years, I'm seeing it with folks who in 2020, right? You got that false sense of security when you bought that house that you qualified for. See, affordability works 2 ways, right? When you have 2.5% rates, I can go buy a whole bunch more. When you got 7% rates, I can't buy as much, right? But either way, you're married to that home, and that's okay. But you got to know how to let that home work for you, and you also can't stay in that bad marriage because I'm going to just do it just because. And that bad marriage might be that 3% or that 3.5% that you have on your mortgage rate. yet all your other debt is hemorrhaging right now. Because like we talked about, the same thing that happened, you're a mini Silicon Valley right now. You were sitting with all you were sitting with all these credit cards, James, at 0%. And now the average credit card rate is over 19%. I don't care who you are. It's impossible for you to budget and go from a $30 a month payment to now your minimum payment might be $50, $60, $70. It
Right.
doesn't matter who you are. You may be able to do it and accept it. Nobody likes it. But then what is the outcome? What are you sacrificing, right? Or are you now credit card debt, James, we talk about all the time. Why do we have people right now when you got 7% rates and rates in the sixes? Why do we have people putting down less money? Because we don't want them house poor. Let's figure out how to buy that house you want, and then we'll do the permanent stuff we can refinance later. What this federal funds rate's doing with these short-term rates, now it's causing people to be house poor within their house. It's almost like you let somebody in, you had them eating at your table, you loved them, you hugged them, you kissed them, and now they're betraying you. The average auto loan, Sam was telling me this week, I think the average auto loan is now $850, James.
What?
Across the country. That's absurd. That's absurd. So when you're looking at certain things, this is where you just got to be really, really careful on what's going on. So that debt part, death, look, nothing we can do about that, right? It's unfortunate. Nobody's calling me going, hey, look, I offed my significant other. How do I get a refi to make this better? Right? Divorce, unfortunate. We know why we've got to do that, right? Because, hey, we got to separate assets. Distance, we know why we've got to do that. Relocating. But debt's something that is just the elephant in the room right now. And James, all these folks that are coming to me, guess what? You know how many people I'm seeing with $60, $70, $80, $100,000 in student loan debt that's still not being counted? James, what's going to happen when they start pulling that plug, bro?
Oh yeah, they changed the rules by which
They
they
just keep
calculate your
kicking
credit score. Yeah.
Just keep kicking it down the road on that. So we got to keep in mind when we're talking about these D's and everything like that, let's look at your situation. There's no cost. There's no obligation. That's why we've got Snap, Send, and Save.com. I told two people this week, sit tight. They're like, Dwayne, my dad, I got to refinance. Sit tight. I told them, it's not time yet. I know what's happening. We're looking at the rates. We're looking at forecasts. And that's what we're going to talk about on the other side. And that's kind of the topic for today. I'm gonna tell you what's going to happen if you keep waiting. And we will not sit here on the show. James may sit here on a show and go, we told you so. But I'm going to give you, we are the crystal ball, so to speak. We've charted through this. So I'm going to kind of give you an example of what happens when you wait for the bottom and you think you're going to time this market out correctly, especially in today's environment. It's almost impossible. So on the other side of the break, hey, we've got Tito's Rate Watch to come. Hey, data. That's what we're all about. I'm going to share some numbers with you on that. And we're going to play. I'm going to wait for rates to get lower. I'm going to wait for housing prices to go down. We're going to go over all those scenarios with you. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
Informer.
Great. I mean, great song. Seville Quarter. When I hear that song immediately, I like to always go, what is that song? Seville Quarters. In college, playing a flag football tournament. That was the hot song. And
what is Seville Quarters?
Seville Quarters is a bar in we were at University of West Florida in Pensacola. And just a great bar. One of those things where you got like a dance club in one part, you know, a Band in the other part. It's a really, really cool place.
I love that stuff.
Yep.
Like Floribama.
Yeah. Yeah. Except a little bit, I don't want to say nothing too negative about Floribama. I don't want to get beat up when I go in there, but a little bit more
No,
higher end, right?
yeah, Floribama is the
Hey,
mecca of
it's the
white trash,
redneck Riviera, bro.
dude.
I
Like,
mean,
I totally belong there, so I
yeah.
can't. I'm not cutting down anybody. Those are my people.
Yep.
Oh, failed white people. This is great.
Mhm.
I like redneck Riviera though. That almost sounds nice.
Right. All right. Well, let's knock out Rate Watch when we get back, and then let's get into the data, man. I'm gonna.
Well, I had a question on the death.
Okay.
Uh,
All right.
parents die. The siblings all have ownership of the house. They don't necessarily have to sell now, do they? Can they? Should they wait and
Well, it
see if
depends.
things
They
get
gotta have.
better?
No, they don't have to sell right now. I mean, you got to. Depends on. Do they have their estate plan set up and succession done, which
That's
everywhere else in the
that's
country it's called
that's
probate.
done. So some siblings want their money right now.
That's right, bro.
And
Look,
some
the body, everybody loves everybody until they think there's a dollar out there, man. And
4 siblings, 2 of them want it right now. 2 of them are like, "Hey, if you just chill out and wait a little bit, you're gonna get a lot more money."
yeah, yep, dealing with that right now. And the one I told you that's a death. That's exactly why they're redoing it. One brother is like, I need the money. They feel bad, didn't make as quality of decisions, and they know when they get that, once he gets that money, it's gone. So they're trying to protect him, right? By going, just wait, you know what I mean? Like, let's not do this. And it's unfortunate. Hey, just got a text over saying, hey, can you tell us more about that Silicon Valley? Listen, we're going to talk about that Wednesday on the podcast on Hump Day Holler. So check that out. And like everything, look, once we're done, James uploads all that stuff over. If you're listening on the stream, or go follow us on YouTube, subscribe to Mortgage Gumbo.
Always say bank when you're talking about Silicon Valley Bank. Don't just say
Yeah,
Silicon Valley.
good call. Good call. People
Whoever
might
just tuned in
think
the
we're talking
last
about
5 minutes. Yeah.
facelifts and Informa. Junior prom tonight too, James. Oh. Give me a hoe if you got that funky dust. Oh, yes, the double Dutch. You know it. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you got any questions, you want to join the show, 504-260-0995. Hey, if you're new to the show, thank you. If you referred somebody over, thank you. Welcome to the Gumbo Nation. Over 8 years, September will make 9 years. We've been providing education and options to you on your most valuable asset, your home. And, this last year has been quite testy. And that's why our listenership has gone way up, right? I understand. You understand. I've got to find out what's real, right? And what's not. So kind of like the old Memorex commercial there. So let's get into our weekly segment we like to call Rate Watch.
Oh, that's me, isn't it?
Yeah, come on, bud. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first hand crafted vodka. Hey, we saw a low relief last week. 30-year conventional was at 6.97. This week we're at 6.76. So a little bit of relief there. Not yet seeing it on the rate sheets, but good stuff there. We'll take that, right? And a lot of that was due to the sort of excitement about the jobs report that came out. And it really should have been much better, but I'll talk about that in 1 second on the continued manipulation of the jobs reports. 15-year, 6.25, FHA 6.25, Jumbo 6.35, VA 6.25, and a 5-1 arm 6.61. So look, rates, we were excited. We were hoping because everything was in good shape, James, until you remember the jobs report came out in February, right, for January. And then everything, for 4 straight weeks, we were just taking it.
There was a 7 on the board. There was a 7% interest rate somewhere.
And we were just in pure survival mode, right? So now, yesterday, the anticipated jobs report came out, and it was what we considered to be what should have been, we thought, based on everything that we were seeing, should have been good news, right? There was some reporting out there that all 10 sectors through what's called a JOLT report, right? And again, this is boring stuff to you, but the things we kind of keep an eye on, because this is how I know when to lock people, because all these things affect interest rates. And if I could get you, 6.99 versus 7.01, I want to do that for you. So when you're looking at these jobs reports, there was one report that came out for the first time in 10 years. All 10 sectors had unemployment was in the not good, right? Well, what happens is somehow, and I don't know how they do it, the numbers, Biden comes on air yesterday and going, hey, how great is that jobs report? We got more jobs. So you got his finance guy, his chairman, saying we got to slow everything down. And then he's coming out going, look how great. But let me put it to you this way, James. You go to your local watering hole, and this is for the listeners. You go to your local watering hole, or maybe you go to the grocery store, and you always see that same cashier. Or you're having a beer, and you always have that same bartender. Hey, Johnny. Hey, Sue. And you get to see them, right? Well, then Johnny and Sue one day aren't there to check out your groceries. Or Johnny and Sue isn't there to hand you over your favorite drink, which is a Tito's and soda with a splash of cranberry. And appreciate everybody who's nice enough to treat me to one when they see me. Thank you very much. I am all about free drinks. So little Johnny or little Sue, all of a sudden you go, where they at? Well, man, Johnny and Sue got it. Congratulations to Johnny and Sue. They got a job now working over at a manufacturing company. They got, instead of just working for tips now, man, they're making 2 times, 3 times as much money, James. Man, well, good for Johnny, good for Sue. Then all of a sudden you come in on a Friday or a Thursday and, hey, maybe a Tuesday morning, depending on how life's going for you, and you go to get that Tito's handmade vodka with a soda and a splash of cranberry, and Johnny and Sue's there. And you're excited. Johnny, Sue, where you been? Oh, well, I took that other job. Well, what brings you back? You picking up extra shifts? You looking to make extra money? No, I lost that job. Well, James, the Fed is now counting that as a job gain. So they're not counting it as a loss in one category. They're counting it as a gain in another. And this is the manipulation that's going on right now. And this is why when you and I all day can talk about the recession, or we in a recession. Yeah, but until the Fed's willing to say we are in a recession and they come out and say it, the same thing we're about to talk about with the I'm gonna, we don't know where the bottom is, James. That's the problem. That is why we keep talking about now is the best time out there to take advantage in the housing market. Because at the end of the day, you could refinance. And let me tell you what else happens. When this thing bottoms out, we touched on this Wednesday, there's nobody out there right now. You and I, James, could all day sit here and say, oh, it's bottomed out. We're in a recession. Until it gets announced and until really this stuff they get to the point where no more things could be massaged. When right now, your sellers are part of the 4D. They got to sell. When this thing changes, right? And when things change, and what I mean is we get on the other side of this bottom. Think about a smiley face. When we get on the other side and things start to go up, potential buyers and listeners, Gumbo Nation, the seller's going to have every advantage. You're looking at 20 and early 21 again, where now you're going to have multiple people competing. James, here's what we know. 63% of homes across the country have a mortgage on them. So 37%, James, of people could care less what you and I have to say. They don't care. Doesn't affect me. Doesn't matter. My home's free and clear. They're not going to touch it, don't want to touch it, or things haven't gotten to the point where they have to touch it. So, James, we already have talked about on this show. We also know that out of that, over 80% have 5.5% or less. So you're limited even when things get better. But listeners, here's what I want you to understand for those who are, I'm gonna wait. For every 1% that the interest rate falls, 5 million plus people become eligible for a mortgage in whatever category it is. So when you say I'm gonna wait, oh, prices are gonna drop. How? Because just like you who's sitting here wondering, I'm trying to time this out. He don't know what he's talking about. No way I'm getting a mortgage when I've got a 6.5% or 7% interest rate. You're going to be right back in. Now, you're going to come to me and you know what we're going to do? We're going to get you pre-approved. We're going to get you fast-tracked approved to try to help you with that advantage. But guess what? You're going to pay more than you're paying today. James, I'm sitting on over $12 million in pre-approvals right now. So, folks, I know this because I've got over $12 million in people that are pre-approved with me that could go out today and buy with a $5,000 guarantee, but they want to wait. And I can't put a square in a circle. And I can't help, and I get it. I can only give you my education, my expertise, so to speak. And when I talk to you, I tell you, it's my job to present options. I can't force this. So, James, when we talk about I'm going to wait, I'm going to this, folks, I'm telling you now, on the other side, when this happens, and if I could tell you a date, I would. If I knew the date, me and James, I'd probably say, hey, let's go hit the beach, and we'll come back on May 11th. But we don't know that date. So you and I, our job is to continue to educate. So
well, the way you describe it, this sounds that advice in the last 2 minutes sounds like it's crucial more so for renters than people who are already owning. Because you know there's pluses and minuses. If the rate goes down, yeah, you get a cheaper monthly payment, but you're competing against 5 million more people for the same house, and that has its own set of problems. And if you don't, then if you're already in a house, then you're still building equity. And so you can just go play around and try and find a better deal later. But if you're renting, waiting means you lose all the equity you otherwise would be building, because the way forward here, if you don't want your rent money to just go away, is you get in a loan, you go ahead and make some payments on an interest rate that's not perfect, and then we'll refi in a year or two or whenever it goes down again. And in the meantime, yeah, you had to make a little bit of higher payments than you otherwise would have, but you have something to show for it. That money doesn't just go into thin air. That higher payment is worth it because there is value that is going to be given back to you when you either refi or move out of that house.
So let's simplify that. What you just said is basically this. You've worked hard for that home. Let that home work hard for you. Let it pay you back for you giving it the benefit of you living in it and you allowing it to protect your family. You worked hard for that home. Let that home work for you. So I've got some more stuff we're going to cover on the other side of the break on this. Because the data does not lie. And you just talked about, hey, more houses. And we're going to talk about what the cost of waiting, because right now, sellers are giving concessions. You got buy downs. You've got all these things that are I'm helping my buyers win with. We're going to talk about why that stuff's going to go away. And we've got the data. Hey, love you being part of the Gumbo Nation. You're listening to Mortgage Gumbo with Dwayne Stein on iHeartRadio, 504-260-0995. And I even got my own dad. The Humpty Dance is your chance to do the hump. Come on, watch me do the Humpty Hump. Do the Humpty Hump. Yeah.
Well, it's 7th grade. Just threw up in my ear.
Mm-hmm. I've got an incredible stat that we're going to share with you folks. What is up? Social media, y'all rocking and rolling. I love it. Thank y'all so much for hanging out today.
This must be a comment for you.
What we're going to do, James, what we may do is we may start to, during the breaks, we may start playing a little trivia and giving away some prizes, right? I mean, we get questions all the time. But, maybe we could put on there and some stat fun things, right? Like, yeah, perfect. But, let's put some, there you go. Thank you so much. I appreciate that. It must be the angle. Yes, you are correct. So, we could put some stuff up here to kind of, for our streamers who are hanging out with us, they could have some fun there. We could have some questions, right? Like, hey, when you get a reverse mortgage, what loan type does it fall under? Is it FHA? Is it conventional? James, do you know? Let's ask you. Let's start right now.
What was the question?
A reverse mortgage.
Oh,
what loan type
I think that
does
has
that
to be
fall
an
under?
FHA.
FHA. That's right. It's a government secured insured loan. That's right.
What is the parish that is God's country?
Oh, dude, come on. That's like that's like when you take the ACT and they give you some points for putting your name on. Dude, St. Bernard, bro.
Who is the new quarterback for the Saints?
Hey, I'm happy about it. I like it.
Say his name.
Derek Carr.
That might work. That might work.
You know what I'm saying? We put that, and we could even type some of them up. So we just put it up. So then if they want to answer, they get a prize. They answer on social media and they get a prize. Hey, there you go.
Sweet mugs.
Here we go. Man, brother Dave, the Corbier. He missed last week. He's back. He's full-fledged. He's rocking. Feel like I'm back at Milius's.
I'm kind of half-fledged today.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Hey, one segment left. If you want to join the show, 504-260-0995 or shoot an email to info@mortgagegumbo.com. So we're talking about I'm Gonna, folks. And on the other side, previously in the last segment, we were talking about for every 1% and why now. Why I'm going to wait to buy, why I'm going to wait for rates to go down, why I'm going to wait for housing prices to go down, why that's not a good idea. So we've been giving some data. 63% of properties have mortgages, right? 80% have 4.5% or less. So existing homes are it's going to be very tough unless they fall into the 4Ds, which those people are selling. They're going to sell regardless, no matter what rates are. That's what's keeping in reality, that's what's going on right now. But for every 1% the rates fall, 5 million people become eligible. And we saw it when we cracked into the low sixes, almost the high fives in the beginning of February. James, we saw it. We were talking offline going phones are ringing. So now what you've got is you've got to sit here and go, when I try to time this out, James, let's go back to 2012, okay? And when the economy kind of, after our 09, 10, that debacle, and we really had to hit that bottom, right? And that's when the bottom came into play because we had all the foreclosures. Then we were like, what are we going to do? It wasn't like immediate. That was the outcome of, letting Sue the stripper buy 5 homes just because she could fog a mirror, right? So now when you look at in today's environment, okay, a couple things, folks. And this is why I want you to understand why the rate, I'm with you. It's not attractive. I get it. But what I want you to understand is this, and why you need to be looking at gaining equity. After a recession, and this is why I keep bringing up, we don't know when we're timing it. James, over the history of time, homes appreciate at a minimum of 8% for the following year after a recession. So we know we're close, right? Let's say think of a bowl or a smiley face or a roller coaster, right? That roller coaster right now, if you want to invert it and make it at the height, we know we're somewhere between the front of the roller coaster and the peak of the roller coaster on heading down the other side. Right?
Because we had a baby recession last year. We had 2 negative quarters. And
that's right. And guess what, James? Guess what? They just reported equity's up 7.3%.
There you go.
Right? Yeah. So for everybody that's waiting, the prices aren't going, and that's why I had that data to share. Prices aren't going to fall, folks. They're not. So what's going to happen, because you want to wait to say that you got 575 versus 7. Who don't want that? Who wouldn't want that? What's going to happen is you're now going to have competition. So now you're not going to get your closing costs paid for, right? So then when you do want to refinance off that 575, because the rates even go lower down the road, because I sense that people aren't going to go, hey, I'm happy with my 575 for the next 30 years. Just like right now, there's not a loan that we're doing. Not one loan we're doing that somebody's going, absolutely, heck yeah, this is awesome. I get to hammer up 675 for the next 30 years. Like I said, I'm getting calls every day. Hey, now is the time? Is it now? Is it now? So for y'all who out there, I'm gonna keep that in mind. And right now in 2012, James, we had this last time we were in this sort of situation, there was 2.4 million homes in inventory. Right now there's 980. But when you take out what's under contract, James, who's under contract right now, we're right at 550,000 in the whole United States. Heck, we almost got that many people listening to us, James.
Oh, I'm so interested in those numbers because that's when I bought my first house was 2012.
That's right.
And I was actually able to buy more than I expected because the housing market was a little bit depressed.
That's right. But then what happened when you bought? It went up. That's what's going to happen. So right now, when you look at this, what is the timing, right? 2012 is when this happened. Then after that, the market went up. Folks, the waiting on the side, what does it cost you? Close your eyes, not if you're driving. What do you see? Zero. Put your hands in your pocket. What do you have? Nothing. The lint. That's what it costs you to go to snapsendandsave.com and have a conversation and us find out, what are we working with here? Right now, James, 6.5 million homes short. If everybody that's eligible decided, just like they just tried to take all their money out of Silicon Valley Bank, if everybody, and the second rates go down 1%, 5 million, the number is going to double that, in my opinion. When we come on this show and say 5.5, our phones are going to be ringing off the hook. But as the phones are ringing off the hook, guess what that means? That means a lot of people are trying to buy that same house that you have. And again, just like we're winning in today's environment, by giving you the fast track approval and you going with a $5,000 guarantee. Those don't necessarily work when somebody comes in and pays 20 grand over asking. And I'm not saying we're going back to that, but what you're going to go back to is 10 people making a full price offer on a home. And you asked for closing costs because you don't have closing costs, you're going to lose out. I'm telling you now, because I've been in this market. So what's going to happen is people get frustrated, right? Just like right now, I got people out looking and I can't find anything I want. I get it. They're out looking and you got to wait for that house because why? We got 500,000 houses across the country.
I can't decide which is better, because I know the interest rate's higher now and my monthly payment would be higher. But when I bought about a year and a half ago, interest rates were at like -0 or whatever. They're almost nothing. And so I was competing with so many people looking for the houses, and I got beat out on bidding wars on 5 different houses before I landed on the one I want. And I like this house, but this isn't the one I want. This wasn't my first choice. This wasn't my second choice, third, fourth. This was my 5th choice.
That's right.
I got a great deal. I did the buy down, or what did I do?
Discount. The discount points. That's right. But you bought also, guess what? You needed to buy because you were relocating. So what do you think is going to happen when all of a sudden companies that are laying people off right now start hiring? The Jameses of the world and the wife of James, Miss Parker, is going to get relocated, jobs, this, that, and the other. What does that mean? Now I got to make decisions. The seller goes, hey, you know what? There's 5 other of you. So a lot going on, folks. Follow our podcast, Hump Day Holler. Go join the Gumbo Nation on Facebook. Go subscribe to our Mortgage Gumbo YouTube channel. We're here for you. SnapSendAndSave.com. The home away from the show is MortgageGumbo.com. If you're looking for something fun to do, go over to YouTube, type in Lakeshore Titan Baseball. You'll hear yours truly in about an hour. Doubleheader against St. Paul's Wolves today. We're here for you, folks. We got this. And until next week, Gumbo Nation, keep stirring the pot. All right, Parker, I got to roll, brah.
All right. See you, Dwayne. Good luck, Gavin.
Thank you, bud. Later.